Wall Street investors are no longer allowed to buy houses. We could be in for a mass sell-off. This news has sent shockwaves throughout the real estate industry and is causing some serious concern for homeowners and investors alike. But don't panic just yet, because I've got some crucial insights that could save you from a financial meltdown. Earlier this week, two prominent members of the United States Congress, Senator Jeff Merkley from Oregon and Representative Adam Smith from Washington State, put forward a new bill named the End Hedge Fund Control of American Homes Act. The bill, if passed, will effectively prevent institutional investors, specifically hedge funds, from exerting control over the U.S. housing market. Apparently, these investment firms may face a tough decision shortly, as they may be required to offload their entire housing portfolio. As a result, this could significantly impact the housing market, with experts predicting the home prices could fall by 30 to 50%. The cause of this predicament is the increased activity by hedge funds in certain cities, such as Las Vegas, during the pandemic. They've been on a buying spree, acquiring over 30% of all houses in these areas, leading to a shortage of affordable homes for regular people. This has made it difficult for first-time buyers to enter the market and led to a steep increase in home prices. With this impending sell-off, many people wonder what the future holds for them. Will they be able to secure a home at a reasonable price? Or will the housing market become even more exclusive and expensive? Please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keep us motivated to keep making you great content. Thank you. Now, back to what I was saying. The newly introduced bill not only seeks to ban hedge funds from acquiring large numbers of single-family homes, but also requires them to divest their existing portfolios of such properties. Interestingly, this bill's definition of hedge funds goes beyond just traditional financial entities. It includes real estate investment trusts, or REITs, and even corporations. This means that this bill could have a huge impact on the real estate industry, as it could force out single-family rental operators and halt many build-to-rent projects. In particular, this bill would likely affect large institutional investors who often act as buyers in these types of projects. With such a broad definition of hedge funds, it's unclear just how many entities would be impacted by this legislation. But one thing is for sure, if this bill were to pass, it could fundamentally change the way we think about real estate investment and ownership in this country. The legislation stipulates that hedge funds must sell at least 10% of the total number of single-family homes they currently own to families per year over a 10-year period. After the 10-year transition period, hedge funds will be entirely prohibited from owning any single-family homes. The legislation is specifically designed to counter the growing trend of institutional investors, such as hedge funds, snapping up single-family homes for long-term rental purposes. Critics argue that this practice contributes to the shortage of affordable housing options for Americans nationwide. By effectively forcing hedge funds to divest their existing portfolios and mandating them to sell a share of their properties to families, the proposed legislation could help make home ownership a more attainable goal for middle-class families throughout America. If passed, the End Hedge Fund Control of American Homes Act would significantly shift the U.S. housing market and have far-reaching implications for the broader economy. Senator Merkley is pushing for a bill that he believes will positively impact housing affordability. In a recent press release, he expressed that housing should be for people, not a means for Wall Street to profit. He points out that large financial corporations have been buying up housing nationwide, increasing housing costs for renters and buyers. According to Senator Merkley, this bill proposes common-sense restrictions to prevent this from continuing. He hopes this will ensure that all families have a fair chance of purchasing or renting a decent home in their community at a reasonable price. While Senator Merkley advocates for the bill, it has not gained support from key players such as the White House and Democratic and Republican leadership in Congress. This means the bill may face an uphill battle in gaining the necessary backing to become law. Nonetheless, Senator Merkley believes that the bill is crucial in making housing more affordable and accessible for all. Representative Jeff Jackson and Alma Adams, two Democratic lawmakers from North Carolina, have proposed the American Neighborhoods Protection Act. This act would mandate that corporate owners with more than 75 single-family homes pay a yearly fee of $10,000 per home into a housing trust fund. The money generated from this fee would be utilized as down payment aid for families seeking to purchase a home. While this proposal may seem appealing to many, it is important to note that a divided Congress makes it improbable for this act to pass during this session. However, legislators must initiate discussions on such topics and their potential impact on people's lives. Considering the current housing crisis, this proposed bill aims to offer a helping hand to those struggling to buy a home. The collected fee would increase affordability and accessibility to housing for families in need, ultimately contributing to overall societal development. The proposed bill by Senator Jeff Merkley has raised concerns about its potential impact on housing affordability and the role of institutional investors in creating more housing supply. The question on everyone's mind is whether the bill would improve housing affordability. To better understand the issue, consider insights from housing economist Kevin Erdman, a knowledgeable expert who has extensively written about the topic. Erdman holds a notably unfavorable opinion of the bill. As the author of Shutout: How a Housing Shortage Caused the Great Recession and Crippled Our Economy, and Building from the Ground Up: Reclaiming the American Housing Boom, Erdman believes that the U.S. has been underbuilding for many years and is now facing a severe deficiency of adequate housing resources. He's also a regular contributor to the Erdman Housing Tracker newsletter, which provides insights and analysis on housing market trends. Erdman's opinion is grounded in the fact that the housing crisis is not a supply-side issue, but more of a demand-side issue. With the demand for housing consistently on the rise, there is a dire need for institutional investors to chip in and create more housing supply to keep up with the demand. However, the proposed bill might end up driving out these institutional investors, further exacerbating the housing crisis and making it even more challenging for middle and low-income families to access affordable housing. According to Erdman, the post-2008 regulatory climate has resulted in a dire need for millions of additional housing units. However, new legislation would compel developers to sell these units in small increments rather than larger batches. If this bill ends up becoming law, it could have dire consequences for the economic stability and fairness of the United States, particularly considering the soaring rents currently plaguing American citizens. The potential ramifications of this legislation are so severe as to cause Erdman to shudder, as there seems to be no viable means of addressing the rampant rental inflation that would result from it. After the devastating 2008 housing crisis, Wall Street jumped into the single-family rental market and started acquiring foreclosed homes. Since then, their presence and influence in the industry have continued to grow. In June of 2022, institutional investors had already acquired 3% of all the single-family rentals in the United States. Interestingly, their share in the more affordable markets was significantly higher, with a staggering 20% ownership in Charlotte, as reported by the Urban Institute. Even though the housing market has been experiencing a slowdown, investors have remained active and are still acquiring properties. In June 2023, CoreLogic, a reputable data analytics company, reported that investors had purchased an impressive 26% of the single-family homes sold, demonstrating their continued interest and influence in the market. Wall Street's move into the single-family rental market is a significant development worth noting. The financial powerhouse's entry into the previously non-institutionalized rental market has led to changes, trends, and shifts in the industry. Their involvement in the more affordable markets has substantially altered the market landscape, and experts keep a keen eye on their activities. It's alarming to see how wealth has become so concentrated in the hands of a select few. The latest tactic to further this trend is to commoditize housing, allowing investors to reap all the financial benefits. This is incredibly unfair and unjust for regular people who simply want a roof over their heads. But according to David Howard, the chief executive of the National Rental Home Council, we shouldn't necessarily blame Wall Street for this problem. Instead, a lack of new housing is really at the root of the issue. It's estimated that Americans need between 2 million and 6.5 million new units of housing in order to adequately address this problem. It's worth noting that this issue will have serious consequences, particularly for the younger generation struggling to make ends meet and enter the property market. Something must be done to ensure everyone has access to safe and affordable housing. The government and private sector must work together to increase the available housing stock. Otherwise, the wealth gap will only continue to widen. When it comes to creating and progressing new housing, the policies and regulations in place carry significant weight. These policies must be carefully tailored to facilitate new homes production, investment, and development. Otherwise, they may only serve to reinforce the difficulties already plaguing the industry. Bills or regulations that fail to support the creation of new housing only add to the existing hurdles, making it even tougher for people to find adequate and affordable places to live. We must take a comprehensive, proactive approach to address these issues. Thanks for watching, and please make sure you subscribe if you enjoyed the video and leave a comment below letting me know your thoughts on this.